Hey guys, welcome back to the channel. My name's Max. I appreciate you all for being here. I thought it'd be fun to check out and see how these funds finish the week out. Maybe look at some charts, kind of finish the week off. I'll just share the entire screen. How about that? And then let's start over here with Defiance, just like we always do. Let's start with Triple QY. All right, so the bottom line is these guys made $1.5 million. They're down 41 cents a share on the month, but that's a dividend estimate of $1.44 in old shares, $4.31 in new shares. Okay. I guess I need to quit saying that, but I can't get used to I just can't believe how big this dividend is. I mean, that's incredible. This one's $1.47 for SPX. So these guys made $590,000 today, which is what they were going for. They're still down 31 cents a share on the month, which is bad, but not really that bad when you consider they were down $1.38 5 trading days ago. They've rallied all the way back from being down $1.38 to being down 31 cents. That's gigantic. That's a monster effort. All right. So yeah, it's a monster dividend too. I mean, $1.47. My Lord. All right. So IWMY, these guys right here. These guys were going for, unfortunately, these guys did not make all the money they could have. They were going for 900,000. They realized 400,000 of it. They're down 70 cents a share. Dividend estimates $1.86. which comes out to $5.57 if we're talking in the new shares. So that's badass. That's incredible. That is really incredible. Let's look at the charts real quick. Look at USLY on the charts. Okay, USLY was a max profit. They finished above their strike price, so that's above their max profit. They're a max profit. I wanted to check the one IWMY that actually did not. Oh, I guess I forgot to draw the profit box this morning. Well, with that figure. Okay, well, let's check the other ones. There's JEPY. JEPY looks, they sold off kind of in the afternoon and almost got, where they lost money, but then right at the close, they turned around and went back up. And we'll look at NASDAQ. I bet it looks fairly similar. I don't know how. Somehow, I guess the Russell it sold off a little too much there in the mid-afternoon. Okay, well, that's fine. That happens sometimes. Okay, so now let's go check out the buffer report, the new buffer report. Okay, so let's start with the big days. ZIVB had a gigantic day. Look at that. Did everyone catch my video today that was about ZIVB and SVOL and THTA? Anyway, if you didn't, watch it. It's a good one. It just came out a few hours ago. I may talk about that here in a little bit, about that video some more, but let's just talk about everything. iSpy also had a hellacious day. But look at all these ones. SPY-T outperformed. JPY outperformed. SPY-I outperformed. I mean, great. KQQQ outperformed. YMAG outperformed. I mean, great job all the way around as far as I'm concerned. I'm going to hide that banner. I want to make sure you guys can see who the stock, who the companies are at the bottom. In case I'm not talking about your company, you can see the Bitcoin ones, YBTC and Maxi. I know there's more than that. I didn't have room to put everyone on here. I added IWMI today. I know that's one that people are interested in. But anyway, you can see in index land, it was a pretty good day all the way around. Now I have kind of a different buffer report, and this was part of my video that I made today. And it's right here. Now, what it is, it's a buffer report between SVOL, ZIVB, THTA, JEPY, and FEPI just over the past week. And it shows you kind of the day-by-day breakdown. But you can see for sure the asset that's orange, which is ZIVB, is the most volatile asset. So it's the most, it gets the most downside, but it also gets the most upside. But then you can also see on there that there's all ranges of outcomes. Then probably the least volatile one on there is probably SPY. Well, no, it's probably SVOL. Probably SVOL. But in any event, you have to pick one out that you like. I think the most impressive performance out of all of these, and I'm trying to be neutral, taking off my Defiance colored glasses. I'm trying to, but look at old JEPY over the past week. I mean, so, you know, the benchmark is in blue is the way this one works. That's last Thursday. That's last Friday. So JEPY is the one that's in orange. Okay. So they were barely down, but they were ex-dividend that day. So they got paid a dividend. But anyway, that was Thursday. But then Friday, the market dropped almost 2%. Same thing, barely down. Then Monday, the big 6.3% drop. I'm sorry, the market dropped 3%. JEPY down 2%. And that's about what we'd expect. You know, these things have a ton of buffer and they pay for it because JEPY doesn't get a lot of upside. You know, so we kind of know that just by watching it every day, but we get a chance to see. So during the bounce back, this was Tuesday, JEPY got none of the bounce back there. Okay. Then that day's kind of a scratch. Really nothing happened that day. But then on Thursday, same thing. S&P up more than 2 points. JEPY only got 3/4 of a point. So, you know, that's how they pay for all this downside buffer they get. They pay for it with upside. But then that's on Friday. This is today's results. And, I mean, you can see they, you know, had a great day, but still didn't have as good of a day as the benchmark. And that's what we would expect because they didn't lose as much as the benchmark. It's a big difference between being down 3% and being down 2%, especially when down the day before the benchmark was down almost 2%. And you were barely down at all. So anyway, I really like that. I didn't make that video. I didn't intend to make it about JEPY, but I just put JEPY to compare it to, and it really came out as a good comparison. Now, I also want to say FEPI. I also wasn't trying to make a video pro FEPI or anti FEPI, but FEPI looked pretty good in the video too. FEPI has more volatility than JEPY, but it also does better on the upside. So FEPI might be a good alternative if JEPY isn't quite aggressive enough for you. Now JEPY pays about a 40% dividend and FEPI pays about a 25% dividend, but they're both good. But anyway, I thought this last week because it was a great snapshot of what could happen because we had a vicious down move and then a vicious snapback so far. And you can see in the snapback, you know, the ones that are the better performing ones on the upside, which would be FEPI and ZIVB, those totally outperformed even during the snapback. So that's the sign of a covered call fund that still gets a lot of upside is covered call funds that can beat the benchmark, you know, during sharp uptime. So anyway, let me know if you guys have any of those funds. If you want to, you can ask a question or something. I'll take a few questions here in a second. All right, let's see what else we need to talk about. Let's see what else we should talk about. Let's look at a few charts here. Let's see how, and I'll take a question or two. If you guys have a question or two, I'll take one or two. Then I'm going to take Jack's and go do something fun. He just looked at me. He's like, what are we going to do? Yeah, but this was, look at Bitcoin finally kicking into gear. Nice rally there. Bitcoin, I mean, it's all, I guess, you know, risk assets are back in vogue. I mean, just on Monday, you know, people could not sell stuff fast enough. Here we are on Friday and everyone's buying everything again. You watch next week, it'll go back the other way. I'm still not real bullish on this whole market. But anyway, let's see what's going on here. Let's look at, so what was down the most today? Bitcoin was down the most. Look at all AMD was down 1.5 points. Oh, hate to see that because that's bad for AMDY. It's not really bad, but Let's look at Misty. There's Misty. All right, here's Mr., which is Misty's underline. Russell 2000, NVIDIA. Those are 30-minute charts. Today was kind of just kind of a little bit of a boring day compared to the rest of the week. I mean, but, it finished close to the highs. If you bought calls or whatever, it was a good day for you. It was potentially a good day. Just if you were day trading to the long side, because this move is pretty good. I just still think it's going to run out of gas up here. That's why I even drew this. I think when we get a daily close outside of this trend line, I just think this little pattern we're in is a bull wedge right here. Since it's the end of the week, let's pull out a few daily charts.
Up a new bag. It's in a closet in a box, but I have enough for.
Okay. So on the daily chart, you can really see, well, it was a pretty vicious pullback, but still, though, if you look back in the grand scheme of things, does it look a whole lot different than that? No. I still wouldn't be surprised to see it go up here and peter out and turn around and go the other way. So, or that's still kind of what I'm predicting. We'll see, though. Maybe I'm wrong. Let me know what you guys think. All right, I got a comment. Last time I did a live stream, hey, what's up, Retire? Last time I did a live stream, there was no one left any comments, and there was only like a few people watching. Retire, who knows? He could have tuned out by now if he did, but if you're still listening, hey, appreciate you being here. But anyway, I was just, I like to do live streams sometimes just to talk to my people and see what's up. I had a really good video. I was really proud about the video I released today. And I really like this comparison, and I'm going to save it. I may keep this, but these funds right here, this SVOL and ZIVB, are the most hypersensitive, and also THTA, of all the covered call funds to like volatility explosions. And I think with the elections coming up and with the possible recession on the, looming out there and stuff, I just don't think the volatility is totally behind us. I think we have more coming. So I may make this chart kind of a regular appearance on my little daily show so we can see how the volatility funds are handling them. Because, to be honest, the volatility funds all performed pretty poorly during the market. When the market was dropping, they all way outperformed the benchmark on the downside. The good news is they didn't perform anywhere near as bad as volatility funds, the same types of funds, have done in the past. In the past, people didn't do this strategy right, and these kind of funds would blow up every couple of years. 2018, a couple of these funds blew up. But anyway, I think we're beyond that now. I think even though ZIVB was down 15% on Monday and 10% on Friday, and is still at this point down 10% for the past 5-6 days, I think it's encouraging that it didn't blow up. Because, of course, remember, with risk comes reward. ZIVB is one of the most rewarding ones on the upside. Check this out real quick. I want to show you all something. Just in case you didn't see my video, this is it. The spoiler alert, now you've seen the video. But anyway, ZIVB right here, look how well they performed during the good times. They're at least 2x of the SPY, and they pay a dividend. They pay like 20%. I think they pay about the same thing SVOL does, but they get all this damn upside. Okay, but what's the catch? Well, the catch is they're going to drop 15% if volatility ever explodes like it did. But the other catch is if you're in it for the long term, it's still up even after that 15%. It started at 15, now it's at 20 or 19 and a half, basically. You received $3.52 in a year and a third. I mean, that's gigantic. Anyway, it's a great fund is what I'm saying. And I think it's proven itself. I think the fact that it's down 15%, and then 10% the day before, that sucks, but that's something we can handle in a fund that has this much upside. But it's just something you have to be aware of. And if it's something, if you don't want to deal with, then get you some SVOL. Here, I'm going to show a comparison here between SVOL and ZIVB. Yeah, I appreciate you being here. Hey, Corey, I appreciate you for being here. That's awesome. That's awesome. Let's see. So if I start, what does that do? Does it keep it on the screen? I'm just learning how to do all this stuff. This is awesome. What's up, Still Horse? What's up? Appreciate you guys being here. Okay, so check this out. I don't want to get sidetracked. Check this out. Let's do this. I want to show. So it's kind of, you can have it your way, SVOL or ZIVB. So SVOL has a ton of upside, but you also expose yourself to 10% down days. Okay, ZIVB has a ton of upside, but you expose yourself to the bigger down days. All right, SVOL, not as much upside, but also not as much downside. So that's why I like to compare these two to each other. But on this chart and in this time frame, it still looks like SVOL's it still looks like SVOL's the one you want, even including the extra volatility. But I mean, it's only a 1 year snapshot. You can't, past performance is not indicative of future performance, but ZIVB and SVOL for that matter are two of the more interesting ones out there. And like I say, I don't know if you saw my video, but the reason I threw THTA in with those funds is, check this out. So all right. So here's THTA. That's a J fund. It's a SoFi fund that it's an income fund, and it pays about 10%. And it's real steady, as you guys can see. It just makes a really steady, it's supposed to be just super safe and just make a steady profit. Problem is if you have a situation like we had on Monday, you can see what happens. I mean, this fund temporarily gave back the whole year's profit, or ever since inception. And even though it's bounced and it's rallied, it's still about even with where it started. And I mean, that sucks. I mean, oh my God, that sucks, because it just built up that profit slowly and surely, and it takes one bad week to destroy it. But this week was not typical. That type of volatility explosion, in my opinion, is a once in every couple of years type deal. The last time we saw something like that was 2020. Then before that, it was 2018. Then before that, it was 2015. And then we had a flash crash in 2010. But these type of things aren't your vanilla pullback. This is way more vicious than the 2022 bear market was. 2022, the market pulled way back, but volatility never exploded and it didn't melt stuff down like this. But anyway, I'm just glad that nothing exploded. But now this one out of all of them is going to have the most work to do. But it'll get back. But the lesson on this is in reality, the volatility explosion cost them about 3 to 5%. So it's a huge overreaction. People didn't know that at the time, but if somebody wanted this anyway, you're looking for some, it would have been a great time to pick it up, because I think the fair price on it, even when you factor in the big volatility explosion, because Jay and his portfolio manager wrote a note on this fund, and they said they lost about between 3 and 5%. But they lost 4% on the one trade, and then they had to roll, but they might make money on that. But I looked at it. It looks like it's going to cost them 3 to 5%. So 3 to 5% from 1973. So we'll call it from $20. What is that? 60 cents. So it should be like 19. If it was 1973 before, we'll give them credit for the first drop, because this fund can take little drops like that. Those happen. But the next one, that's the one that, So from there, if you subtract 5% or 3%, if you subtract 3%, it'd be right around $19. So anyway, if somebody could have got some at 1850, that would have been great if you wanted some of this anyway. because, it's a real steady payer, pays 10%, and it'll probably go back to a chart pattern just like this for the next year and a half or something, So I don't have any of this. None of my people really talk about it too much, but it's the same type of deal as SVOL, and it's just a more conservative version. So I don't know. I liked it. But I really like that video I made. I appreciate you guys for being here. Dan, I really appreciate your comments. You're one of my favorite commenters. Yeah, well, the Japanese carry trade. Now, there's a guy that he's not here right now. His name's Echo Eversky, and I know him from Discord. He's been telling me about this, for months. But anyway, and yeah, I guess so. But anyway, the good news is that our market handled it pretty well. The market didn't melt down. We didn't have mass margin calls that I know of. I haven't heard of any hedge funds going under yet. We haven't had any ETFs or ETNs blow up. So, I mean, so far so good. Like I say, I don't think it's totally behind us. I still think we'll have a second leg and maybe a third leg down later this, here probably next week again. I think a good parallel maybe for this fall is 2019. I'm going to show you guys a chart of the fall of 2019. That was another collapse that I predicted perfectly. I was telling people all year that we would, or not, starting about in the summertime. I was like, well, I don't know. It's going to get ugly here pretty soon. Anyway, but let me show you that real quick. And I could see a scenario like that happening. I could see a scenario like that happening again. Okay, so, and also we'll look at the Volpocalypse since we're talking about volatility explosions. I'm going to get this probably expanded and then. Okay, so yes, this is exactly what I want to talk about. Okay, so this line is the 200-day moving average, okay? Really what just happened is more comparable to the Volpocalypse than to 2019. In my mind, I'm afraid this is going to turn into a 2019, but on a chart basis yet, what happened to us the other day is basically the Volpocalypse. Because when we fell down, even on the NASDAQ fell down and hit the 200-day and has now bounced off it. So even though that was Volpocalypse was a vicious event, it wasn't a bear market type event. And by bear market event, I mean knocking you under the 200-day. I think that the bear market starts under the 200-day. That's my opinion on that. Now, but later in the year, this is the one I saw coming because we kept going up all summer. And and this is maybe what we're doing now. So here's the first leg down in September and October, but then we had a vicious rally, which could be the phase we're in now. But I think we could have some action like this and go and make a lower low into the October, November timeframe, just in time, of course, to rally for Christmas. Even this year, we had a Santa Claus rally. We always have a Santa Claus rally. 2019, the low was made Christmas Eve, and anyone that bought New Year's Eve calls on Christmas Eve was handsomely rewarded because it was one of the face rippers of all time from that point on. As you guys can see right there. The market ripped from 2,300 all the way to freaking just straight up for like 5 days and went out at 2,500 or something. Anyway, so I see some comparisons between the shape we're in now, between Volpocalypse, but I am concerned that it's going to lead to like going under the 200-day moving average. So I'm going to show you guys on the chart where we are in comparison to the 200-day right now, because that's really what I'm. Above the 200-day, you can almost always, buy the dip and everything's fine and it's all fun and games. I mean, for the most part, but then that's when things get serious is under the 200-day. So on the S&P, you can see we got close to it, but on the NASDAQ, we bounced right off of it. So now I'm going to show you one other graphic here. Okay, so these are all the open gaps that we have left behind on the NASDAQ. Okay, and so those would be good areas to target also on the downside. If we go down, those might be areas where it might bounce from, Also, I drew this line right here. This line is exactly 20% down from the high. 20% down is how some people define a bear market. So I say it's under the 200-day, but definitely if it's under the 200-day and the 20% down, for sure it's a bear market. But I wanted to show you on this chart, we could break the 200-day and still not be in the textbook definition of a crash or a bear market. So what do you guys think about this market? I want to hear your opinion. What, are you guys bearish as I am, or do I need to quit talking being bearish or whatever? Adam has a question. I'm going to put it up on the board. But if you guys want to, let me know if you guys are bullish or bearish. I do think we'll get a Santa Claus rally, but I think we're going to sell off first. All right. Okay, so Adam said, I do have a question. You spoke on KQQQ. I picked up a lot on Monday. How do you feel it will do as it pertains to retaining NAV and its yield with the strategy they're using? Okay, so that's a great question. I appreciate that question. Hang on just a second. All right. Well, let's look. KQQQ is really not. There's not enough history to look at. I like the fact that she bought it on Monday. So here's the thing. My area of expertise is the option part of it, and the reason these things look like they have NAV erosion and decay is because when you're selling covered calls, you're trading part of the future upside for current income, right? Okay. This KQQQ doesn't really sell covered calls. They sell a few, but they aren't a high yield fund. They're just what I would call more like the regular mutual fund or ETF. They're going to pick really good stocks. They're going to, and they have a mechanical system to do it. And they are going to sell calls on some of them, but they aren't going to sell calls in such a way where it's going to cause any type of NAV decay or erosion. I mean, because that whole thing's a myth. Don't even get me started on it. But whatever it really is, whatever you want to call it, it's not going to happen with KQQQ because they aren't going to be as aggressive enough. It's the funds that are more aggressive with the option activity that have the more severe problems. Howard's saying he's going to make 4 to 12%, and so far from the calls he sold, he hasn't sold enough calls to pay a 1% dividend yet. So he's not in the call selling business. They're trying to make money in that fund from picking the right stocks. I mean, in my opinion, I think they're going for a different thing here. Hang on a second. I'm going to go get a Coke. He's trying to be like a FEPI, but now, and I compared it to a FEPI because he's also going to have 15 tech stocks. But the difference is FEPI writes calls on every one of their stocks and pays like 25%. Howard's not going to do that. So the FEPI comparison's not that good. Howard's trying to compete with JEPQ or JEPI, really. I mean, because he's, if you're going to pay 4 to 12 or maybe XYLD or something, and there's nothing wrong with those funds. Those are great funds. I mean, and I'm sure Howard's planning on beating those funds but it's going to be more about picking stocks rather than the option strategy part of it. Does that answer your question? Does anyone have that yet? Anyone else besides Adam? Adam, I appreciate that question. Hey, Larry, thanks for being here. I appreciate all you guys for being here. Here's a new person, Moss Rocks. I haven't seen you in here before. Hey, Corey, how's Billy doing? Tell Billy, hey. Is Billy there? Can Billy hear me? Hey, Billy. What's up, Billy? Billy's a good guy. All right, guys. Well, I guess if you don't have any more questions, I'm probably just going to let you all go. But I really appreciate you for being here. Oh, there's more people on the way. Yeah, Retire. I guess Retire put a message in Discord. I appreciate Retire for doing that. Okay, yeah. So Corey does still hear me. Okay. All right, Corey. What are you going to do this weekend, Corey? Do you guys got any plans? I'm going to tell you my plans right now. I'm going to, I don't know. I don't have any plans this weekend. I'm going to work on videos. I'm going out of town next week, though. I'm going to be back in Oklahoma next Monday through next Saturday. but I'm going to produce a couple of videos this weekend. But then my content's going to be on the road content next week, just FYI. But I'll keep up with all my stuff. I won't get behind or whatever. It's going to be an easy trip. I'll have, when I went to New York, I just got behind because I was having fun with Corey and Retire on Dividends. And I got behind and I just now got out. All right, Adam, what's your other question? All right. Yeah. Okay. So Happy Camper says no, she's staying late doing more during work. Yeah. Yeah. I do need to clean this weekend also. I need to clean, organize, and pack, get my clothes ready because I'm going to be out of town for a week and I'm going for a wedding. So I need my slacks. I need, I need that kind of stuff. Yeah. I know about the out of money part too. I've been asking for it on, I've just been coming out and asking for it in my shows, or at the end of the show, I say, please don't forget, you can always remember to support the channel. That doesn't go for any of you guys. You guys are my regulars. But when I do my show, when I do my little twice a day update, I've been trying to remember at the end just to say, hey, anyway. And I've been noticing, I've been picking up some more money here and there. But yeah, I know how you feel, Corey. I know how you feel. My channel's viewership has gone way down. And so as far as my clicks and stuff, my metrics got down. My viewers are actually as high as they've ever been. I have as many subs, but I'm not doing as well on the other stuff. But oh well, it's all fun. It's all fun. Yeah, I know it. I need to get on Happy Campers and send her a super chat. You've been swing trading MSTR? Shit, I want to get you on and hear you talk about that. That's awesome. Now, let me tell you, though, these are not trading vehicles. You're supposed to allocate these. What are you doing? You're exactly my problem. I fight with people like you all day long. You guys allocate. Don't trade. Oh, my gosh. Now, I think that these could be trading vehicles, and but you know what I'm saying. Anyway. Turn on super chats. It's first day I turned on super chats. Mike, the tactical stock scalper, sent me my first ever super chat. I was so proud. I mean, I didn't have it on for 5 minutes. I also did a live stream because when I learned how to do live streams at super chats, that they came on the same day. So I did a live stream and Mike helped me out. Anyway, well, congratulations, Corey. That's awesome that you're trading MSTR. You doing pretty well. I mean, hopefully you bought the dip. Hopefully you bought the dip. What I'm really looking forward to is they're coming out with the yield max with an inverse Qs. Okay. And they already have a regular Qs. They either have triple QT or triple QY, so you pick which one you want. In a bull market, have about 70% in that, but then put 30% in the inverse. I think this is going to make a good trade and just kind of keep them balanced, kind of like Tesla and Crash, except the problem is Tesla and Crash is only based on one stock. So it goes up and down too much. When you can do that on an index, that's going to be so huge. People don't realize how huge that's going to be. I'm really excited about that. Hell yeah. I need to send Corey $100. I just need to Venmo her $100 and try to get, or a couple $100 and try to get some advice on this. So check this out. While I got you guys looking here. So I was so proud of this. This is my masterpiece. It's called my total return worksheet. And I got a worksheet here that will tell you, it'll go back to the inception of any asset. It could be Tesla, and it'll compare it to the parent, and it'll show you what you would do with whatever amount. And I started with 100,000 based on if you reinvested the dividends. One guy, and I had different scenarios. One person cashed out all the dividends. The other person reinvested 2/3. The other person took the dividend and actually bought stock in the underlying, which is Tesla in this case. And then I chart out how they do. Anyway, I am so proud about this spreadsheet. It's ugly, but I need somebody like Corey to help me prettify it and make it where it's, where people can read it. But what it does for me designing it is really impressive. It calculates everything automatically. I was really happy about that. And I have some complicated stuff on here. I have one guy that cashes out and does some stuff with some of his money and then does something else with, anyway, I have some pretty complex content on here. I've made one video about it. I'll make a new video about it, but it's called my Max's Total Return Worksheet. It's a blast. Anyway, it's a blast. I started working on it again last night. I've done it before on Tesla and Tesla. I'm going to do one on NVIDIA. I'm going to go back, or on NVIDIA. I'm going to go back and I'm going to see if you would have started at the inception of NVIDIA. And I'm going to look at 3 or 4 different money management styles, what you do with the dividends, and then kind of see where we end up. But anyway, I thought that's a good idea.
I'm out.
All right.
If the Synology fucks up again, which I hope it doesn't, but
hey.
I think it had something to do with the network.
All right. Well, I'll give you a call later.
So I'll just have you turn it on and off.
Well, just give me a call and let me know. I'm saying bye to my roommate. All right. Well, yeah, just let me know. So all I got to do, I have to unplug it or just flip the switch? All right. All right. Well, hey, guys, I'm going to let you guys get out of here. Because I've been rambling too long. But I'm just trying to make sure I have all the questions. What's Nana Nana do? Oh, my God. You guys are going crazy. Okay. Adam's asking a question. Does it have a field for external input weekly? I can make it have anything. It's just, yes, in my mind, it has all that stuff. It's still in progress. I'll make some content on it soon, especially if you guys are interested in that kind of stuff. But no, not right now. It doesn't. Would you like to volunteer to add that stuff to it, Adam? Because I want that kind of stuff. I just haven't been able to do it. But anyway, what are you saying, Dan? Have you looked at Beto 46? Yeah. Yes, I've looked at Beto. I'll do some content on that. But I mean, it has flat nav because it's underlined as Bitcoin. Bitcoin's been on fire. I mean, you know what I'm saying? So I don't count something that is having flat nav if it just means it has really good underlying. That's just me. That's just me. Oh, look, Corey's showing me some love. What do you got going on here, Corey? Yeah, I know what. I'm locked out of Discord right now. I get in Discord about 2 or 3 times a week, and I try to respond to as much as I can. I have to do Discord from my phone. I cannot get in Discord from my computer no matter how hard I try. And I've been locked out since I got back from New York. And I did not know what to do. But anyway, it's a mic problem. Or I'm sorry, it's a Max problem. But it actually is a mic problem. So Max, he's got stuff under control, but this Mike guy, you don't want to know him. I need to make a show on, I'll do some more shows on charts or whatever. But yeah, Dan, I haven't looked into Beto too much, but also I don't think BITO, well, yeah, they do pay a dividend, but I don't even think they're technically a covered call fund. They just make so much money slinging futures in Bitcoin. I'm just saying, that's great this year, but whenever we go into Bitcoin winter or whatever, you aren't going to be anywhere want to be near that one. It won't have flat nav then. So I'm just saying the flat nav is kind of in my opinion, is a little bit of a misnomer on that one. That's just my opinion. But I don't have any problem with it. But what I would rather see you do is, if you like that one, get Maxi, MAXI, where they trade covered calls on that one. So you at least turn that volatility from that one into some income. I mean, that would be I would think that would be a better idea. I don't know. Do you correct on Beto? So do you guys agree with me on that? Yeah. I don't know a whole lot about Bitcoin and stuff, but I cover all the covered call funds, and Maxi was one of the best covered call funds last year. But the reason why it was so good is because their underlying is Bitcoin. And even though these don't get that much of the underlying up move, it still was up. It still was up 100% because, probably Bitcoin was probably up 300% last year or something but anyway. But yeah, I just prefer Maxi or even YBTC. Now I know Corey covers YBTC. I think because I get confused on which one's the Round Hill one and which one's the Yield Max one. But it doesn't even matter. But anyway, Corey probably covers both of them. But I'm going to kind of make it a new little niche. I'm just putting it out there that I'm going to specialize also, in addition to Defiance, to covering the short volatility funds, which is SVOL, ZIVB, and also THTA and stuff. Yeah, so YBIT is Yield Max. That's right. And YBTC is Round Hill. And that's another thing I want to make a video on. I just do not get the fascination with Round Hill. I mean, the weekly payers. People think they're so much better than Defiance, and I just don't see it. And I talked with Jay about it at dinner, and of course Jay agrees with me, but Jay's just like me, so that's no wonder. But Jay kind of laughed and he goes, "Wait till the market goes down. That thing's going to drop like a rock." And I need to make a video and see but I guarantee you that Round Hill did drop further this week than Triple QI did. Let's look real quick at the buffer report. I don't really think I could tell from here because it's just one day. And I'm not saying they aren't good. I know QDT and XDT are good. I just don't think they're like that much better because what they do is they don't get as much of a dividend. Okay, so they don't pay as much. Okay, so that's fine. But because of that, that's why Jay is going to predict they're dropping like a rock, because the dividend is what protects the downside. So they won't be as good in the down market. But, I guess the trade-off is if they're going to be better in an up market. So, and maybe that's why people like them, because the market goes up most of the time. I'm not saying there's anything wrong with them, but I'm just saying I don't see that just because they pay weekly that it's going to be able to compound and you're going to be able to come out ahead of the monthly payers, because they do pay weekly, but they pay less, a lot less. They pay like, you know what I'm saying? So that's my thought on Round Hill. Now, like I said, I don't have anything against it, but I just don't see, QDTE or triple QT. I just don't know what else a person would need, or triple QI, depending on, how much money you need. Yeah, but have you noticed? Okay, so, oh my God, dude, with all the volatility this week, they're all going to pay insane amounts. Okay, and that is one thing that only the daily funds have access to this volatility, or they have more access to it. Yeah, so that's going to be Round Hill. That's also going to be the Pro Shares that iSpy is just murdering it. Well, but don't forget, and the Defiance killing it. You saw my spreadsheet where Defiance is beating, JPY is beating everything else on there, in my opinion, on a risk adjusted basis. I mean, but you can make a case for FEPI doing really well too. But GPIQ is a great one, Corey. There's nothing wrong with that. Does anyone have Bali, BALI? But I would also caution, though, GPIQ will not be as good if the market turns down. But for a bull market, hell yes. GPIQ is a great fund. So, yeah, Round Hills, I definitely think, I'm so glad that everyone's in on the dailies. For a long time, people thought the dailies were Ponzi schemes or whatever. But the daily paying funds, even if you don't like Defiance, go get you some Round Hill, go get you some Pro Shares, because they can profit from these really sharp intraday moves. And the really stable funds that have the stable, NAV and everything, like JP Morgan, they totally miss out on this, because the monthly time frame, the monthly time frame is more immune to these really quick volatility jumps. But anyway, okay. So what's Dan saying about Maxi here? Maxi's up. What's this here? 28% year to date, or 23? Okay, 28%. Yeah, but charges 11% management fee. There's a video on YouTube where the guy from Simplify explains that, and there is an explanation for it. It's out there. I forget what it is, but it was in other words, it's one time. It's not on a continuous basis, but yes, they did that year for some reason, and they have a reason for it. But yeah, I mean, it's yes and no. It is true. It's printed 11% in the prospectus. I've already looked it up and I forgot what it was, but there's a video out there. They asked the guy that owns Simplify, I forget his name, and he explains it. But it was just a bad situation, but it was a one-time deal that it was that much. It was that much that 1 year for some reason because they had some, I don't know. Anyway, but I'm saying it's not the way I understood it. It's not an ongoing problem. Anyway, but do your own research. Like I say, there's a video out there on it. I'm just not that interested in that fund. The only reason I know about it is because I did a screener to see a badass on Corey. Good job on Yes to Bali, Corey. I'm glad you have some. The only reason I know about it is because I did a screener at the end of the year for which funds are up the most, and it was up like 150% last year or something, because they do synthetic covered calls on BITO. So then I had to figure out what BITO was because I hadn't heard about BITO. I don't know about, and so but then I saw what BITO is and realized, okay, yeah, no wonder they're up that much. But anyway, so yeah, do your own research on Maxi. I wasn't recommending that anyone buy it. I was just saying it's an example of, I would rather have it than BITO just because of one thing, because they sell covered calls. I believe in selling options. So BITO makes money also and does pay a dividend, but they don't do it from call selling. They do it some other method from doing futures. And I just don't understand the mechanism of it, but I'm sure BITO is a good fund as well too. All right, guys, well, I'm gonna let you guys go if you don't have any more questions, but I really appreciate you all for being here. And it's the first live stream I've had in a couple of weeks, but I appreciate it. Okay, so this video coming out this week, and I'm going to tease it really fast. It's going to be on something called the 100-year portfolio, because the 60-40 portfolio is broken, and it's going to be on a new solution for a portfolio that looks further out in the future than that. So I think I'm really excited about doing it. I'm writing it out right now. I'm hoping to get it shot this weekend. So let's see what Corey's saying. When I started doing YBIT, I started comparing a lot of these. Yes, Corey, nothing's going to get by Corey. So Maxi did the best in the bull run or anytime it goes up without buying actual Bitcoin. Okay. All right. Yeah. I don't doubt that at all. Jay was telling me he was having problems in New York with YBTC, that they had not have problems with, but they have weird options. And I don't know if they're having problems getting fills or with the strike prices, but some option pits and some companies just have, different option pits and things. All right. So I got another question here. Oh, some good high yield bonds. If you mean high yield bond ETFs, I like one called Riser, RISR. Now, I don't know if it's considered a bond ETF. They actually do more like mortgage-backed securities, and they do, but they are fixed income, and they do pay a nice, dividend. However, the reason it's called Riser is they're made for an interest rate environment where the interest rates are going up. They're most times when most investments, when interest rates go up, it kills the investments. But Riser somehow has it hedged away or something. Anyway, Riser, let me show you this freaking thing. Riser, me and Corey in Retire, we have a good buddy. What's his name? Mike Venuto. He's our buddy from New York. Anyway, he's the freaking sub-advisor for Riser, and I talked to him about it in New York. I love this fund. So I'm going to show you Riser compared to SPY. I don't know if it answers your question, though, because it's not technically a high-yield bond fund. So, but anyway, it's the closest thing I could come up with. So risers just, I mean, this is since 2021 that's been around. So 2022 was a bad year that interest rates were rising. And sure enough, this had a great year. So it did what it's designed to do. But now that interest rates are falling, it may not be the time to invest in this. So I'm not telling anyone to go get it, but I'm saying I like the shit out of Mike Venuto. I think Corey did too. We all did. He's a great guy. And he has a lot of other good funds that have done well. So I like this one. If I was trying to put together something in a fixed income, I would use this to offset some bond exposure, because the thing about bonds, the thing about bonds get killed when interest rates go up. So I would put something like AGGH or HIGH or some high yield covered call fund in there, like the one you were talking about, something like that. I'd have to do some research. I really don't know that much about fixed income. I like equity stuff. But anyway, I would do some research and put the best couple of those in there. But then I would also add some riser in there to hedge the interest, to theoretically hedge the interest rate risk. So, that's the idea. But I need to do some research on that and actually, I want to do a video on that. I was thinking about doing a video on comparing all the super safe funds. And tell you the truth, I was going to put THTA in there. But I'm not really sure I would call THTA super safe. I mean, it is super safe, but sometimes the super safe funds, by virtue of being too safe, are really not that safe. And I think THTA falls into that category. But anyway, like I say, I need to produce a video on it. Yeah, on the joint live stream. Yeah, whatever. I'm down whenever. I haven't gone anywhere. I'm just locked out of Discord. I get on there like 3 times a week instead of 3 times a day like I used to. It's because it's on my Mac. I've signed in on the MacBook, but the MacBook's broken, and I've used too many other computers. I'm over my limit, and I have to call or write the company. It's some problem that other people have had. It won't let me authorize another computer or deauthorize one or something. So right now I can get on my phone or on my MacBook, which is dead. I'm still hoping to get the MacBook fixed. And don't forget PayPal, Max Convexity, if you want to help with the MacBook. Just joking. But anyway, but when I get the MacBook fixed, then I'll be back in. But for now, I have to get in on my phone a couple times a week. So I'm not blowing everybody off. I miss everybody, but I'm down to do a joint live stream whenever. I'm down whenever. Let's do it. Let's do it next week. I mean, I have an interview with Jay coming up August 21st. But other than that, the rest of my month's open. And I'd like to ask, I want to get Mike Venuto on also. I'm planning to get Mike Venuto on. I haven't asked him yet. I'm a little bit scared. It's like asking someone to the prom. You don't know what they're going to say. And anyway, I think Mike will say yes, but I don't know. But anyway, so I'd like to get Mike on to talk about riser. And also Mike and I had a conversation in New York that I didn't record, but I wanted to recreate. He told me some other good stuff that I want you guys to hear. He explained how some stuff works. So anyway, I am going to get him on. So what's Adam talking about here? Adam, I haven't seen you comment much before. Anyway, but okay, glad I was able to catch you live. Oh, you're on the base AAAB in Iraq. Just happened. That's kick ass. Well, so are you a private contractor or are you military? Anyway, in either event, thank you for your service. I appreciate it. That's awesome. That's awesome. I'm glad you're here. A lot of people in the military like these funds, and a lot of people like to trade options. And these funds are fun because they make a lot of money. And some people are using them as trading vehicles, even though I'm not recommending it. And if you pick the right one, you make a lot of money. And, anyway, I'm trying to get in touch with it because people are doing it. So it's whatever, I guess, but I certainly don't recommend it. Anyway, retire. I'm down whenever you guys want to do one. Okay, so let me see. What are you saying here? You're saying you guess you're looking for some bond ETFs with treasury bond exposure, like BND. Maybe we don't have a lot of fun yet. I mean, Riser, the one I told you about, is not a bad fund. I mean, they do have some treasury stuff in there, but they also have corporate and some and also some mortgage stuff. But it's fixed income. But yeah, I'll do something on that. I really don't know. I really don't know. That'd be a good video topic. Thanks for bringing it up, Corey. Thank you for your service. When you were in Iraq in 2004, nothing was going on back then. That was no big deal, right? Right? I'm just joking. That was right when it first kicked off, or when it kicked off again. I mean, it first kicked off in 92, but then, yeah, Corey was right there on the front lines. Anyway, I'm sure that was scary. I was being sarcastic when I said nothing was happening. So Adam, AFG, what's AFG? Oh, okay. Probably a contractor during the pullout. Okay, cool. Yeah, I've known some people that were contractors, and anyway, they seem to like it. I was just joking, Corey. I know that was right during the thick of it. Oh my gosh, the weapons of mass destruction. And I mean, the Bush years, oh my gosh, there couldn't have been a more crazy time to have been over there. We hadn't caught bin Laden yet, but we were still catching him. We were going to catch him. We were always right on his tail, and then we missed him. And oh my gosh, I remember that. I mean, that was something else. That was something else. Yeah, I called contracting the golden handcuffs. I could see that. Angry camper. Now let's be nice, everybody. Yeah, no, that's what I've heard. I've heard the money's almost too good to turn down. I've known a couple people that did that, and but yeah. Anyway, in either event, it's being away from your family in the States and stuff. I think it'd be hard, for sure. But yeah, I'm up for the live stream whenever, Retire and Corey. Just set it up. Even though if I try to check in on Discord, but I have Facebook, and Corey, you have my phone number. Just text me if you can't get a hold of me. But I'll do the live stream whenever. If I'm not responsive enough on Discord, just shoot me a text. All right, guys. Well, I got a troll once that said that gave me some bad feedback. And so anyway, but that's what he was saying. He was saying that I just go on and on forever, but I would sit here and talk to you guys all night because I just like to talk. But he didn't really like it that much. So I want to try to keep the trolls. Yeah, text me anytime, of course. And I'll try to be better about check. I really do check Discord, and I check my messages on Discord twice a week. So if it's not that urgent, put it in there too. But I appreciate you guys. And then, of course, anyone is always welcome to watch my video. I know Corey, she takes care of a family and has a job. But if anyone else is looking to get a hold of me, and a lot of people do it this way, watch the video and leave me a comment. All right, guys. Well, I appreciate each and every one of you guys, and I will talk to you guys, not directly, but I'm going to release this really good video this weekend. And so indirectly, I'm going to you guys will communicate through that, and maybe through the comments on that video. All right, guys. Well, I appreciate all of you. You guys have a wonderful afternoon. All right. See you.